So, understanding Fed rate cut probability requires distinguishing between market expectations and the systematic reality of how institutional money responds to policy changes. While current probabilities show 95% expectation for a September 17th rate cut, professional positioning depends more on cycle timing and institutional flow patterns than probability percentages that markets have already priced into current valuations. A quarter-point reduction represents policy acknowledgment rather than economic transformation. Institutional quants analyze Fed rate cut probability through sequential policy frameworks rather than isolated event expectations, recognizing that first cuts signal policy direction rather than immediate economic transformation. Professional money evaluates whether initial cuts represent sustained easing campaigns or symbolic gestures that lack follow-through commitment. Current probability levels reflect market consensus rather than systematic positioning criteria that institutional money uses for capital allocation decisions. Cycle projections provide systematic frameworks for positioning around Fed rate cut probability events by identifying when policy timing aligns with institutional flow patterns. The convergence of cycle timing with Fed policy creates confirmation signals that distinguish between temporary relief rallies and sustained institutional positioning opportunities. September cycle lows, coinciding with rate cut timing, create systematic positioning opportunities through multi-time frame alignment validation rather than policy speculation. So here's the key insight. Multi-time frame cycle analysis, gives us a systematic way to position around the probability of a Fed rate cut by really distinguishing between those short-term policy reactions and more sustained institutional positioning opportunities. Professional positioning, honestly, it requires systematic confirmation across several time frames, rather than just reacting to policy events that might create temporary market moves without lasting institutional support. And, high probability events usually offer only limited opportunity because markets have already adjusted prices to reflect what most people expect will happen. If you're ready to trade with more discipline, clarity, and confidence, and you want to predict the market days or even weeks in advance, then join the Market Turning Points community and visit stockforecasttoday.com.